and welcome to Pro Trader Strategies Market Commentary for Monday, October the 26th. I'm Eric Wilkinson. Yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that comes to impact the markets with some of my market analysis. And I'm going to do the same thing for you folks out there, but I'm going to layer on top of it these option strategies that I find to implement in my portfolio based on those assumptions we come up with from our market analysis. For you folks out there, though, I also have streamlined your process in order to find the right option strategy for your given assumption. We don't just pick option strategies out of the hat. What I'm trying to do here is take my 25 years of experience, knowing what works and what doesn't work, and implement it into a streamlined process for you where you can follow guidelines and find that right strategy for any given assumption. I know you guys are out there looking for the key to the opening up the box that finds the right directional assumption every single time. And I will tell you, over my 25 years of experience, I've done the same thing as you guys out there, tried to find the right thing out there that gives us the right directional assumption. Well, I don't think that it's really out there. The best way to do is come up with an assumption and then use an option strategy around that assumption that gives you the highest probabilities of success. And that's what I try to teach in my webinars there. All right, so without further ado, let's get on with the economic data. Nothing really across the pond, but here in the United States, we got new home sales coming in slightly below 1 million. It was looking like we were going to be going gangbusters. Again, they revised last month's number down below 1 million as well. So we came in at 959,000 this month, expected to be 1,025,000, and they revised last month's number down from 1,011,000 to 994,000. Yes. All right, so week data, it's still pretty decent to have home sales that good, I think. But overall market is really coming off. The equities are just having an ugly day because they are starting to realize that the stimulus isn't probably right around the corner, and that's causing the overall equities to come off. The economy really needs a stimulus right now in order to spur some spending and get this economy moving again. We're also seeing across the pond more coronaviruses really ramping up. Even here in the United States, some people are really considering starting to lock down again. I know some of the schools in our area are really having some massive outbreaks there. So a lot of things up in the air, juggling at this point in time. We can see with the crude oil futures coming off by $1.25, $1.32 now, and below that $40 a barrel mark, and breaking below that 50 Fibonacci we were talking about. It's not acting as much of a support and resistance as what we would normally see because it's lined up with that Fibonacci, or the Fibonacci's lined up with the point of control there, and all of those things coming together is kind of causing it to be a little bit more fluid through that number. But the psychological mark of $40 breaking down again today. We settled below $40 on Friday. Today, continuing that downslide as it looks like if there's more lockdowns here and or across the pond, manufacturing probably going to struggle a little bit. All of those things means a lack of demand for crude oil. All right, gold futures moving a little bit higher today, and that's not based on what we would have been talking about, and that's the stimulus, meaning that they print more money that weakens the dollar, gives strength to gold. Today, I think it's more of a flight to safety as we're seeing the Dow Jones off by about 800 points, being the leader of them all. NASDAQ is off on the day, but not quite as much as the rest of the equities. Bonds making a move today. As we can see here, again, flight to safety. Also, I've talked about this. This is well overdone to the downside. Yes, we do have lower lows, lower highs coming off here at a downward angle here. But again, I think that the market needs to move back up into the 177 handle is where the real sweet spot is. That's where the point of control is, right in and around that 177, 178 area. And that's where I think interest rates are going to remain. We're even hearing Fed governors talking that they're just not going to raise interest rates. Here we go with the equities, off almost 800 points in the futures. The Dow Jones Index is off over 800 points at this time, and as you can see, leading the charge to the downside, down 2.8%. We've got the NASDAQ off by almost 2% at this point in time, and on the lows of the day, we're going to see that continuing continuing story here as we go through all of the equities. Just not a whole lot of strength at all in these markets. We're seeing some pretty decent volume coming in here, and from the sell side, obviously, because we're down. But again, you can see E-mini S&Ps off by just better than 2%. Dow Jones is leading the way. And you can see one green candle, and that was right off the open. We got a bit of a bounce, but the overall market sentiment today is really bearish because we aren't probably getting that stimulus package. We're seeing, the new home sales, it was worse than expected. That's probably a little bit of what we're seeing here as well. But new home sales, keep in mind, we saw those interest rates go up. So I think that a lot of people were kind of like, hey, you know what? I saw interest rates were just lower about a month or so ago. I might just hold off and wait for a lower interest rate here before I really start going out and buying a house. Plus, we are heading into the winter season here in Arizona. It is the busy season for housing, but for the most part across the United States, we are going to be in a lull for home sales because winters just are the slower months for buying a house. Nobody wants to get out in the snow, I guess. And we're seeing snow across the United States here, which is exciting for me because I'm a big snowboarder. But here in Arizona, where we usually see 80s around this time, it is 66 degrees today, so pretty chilly. Have all the windows open and not quite as bad as what everybody else is seeing. All right, so IBM. Let's talk about IBM for a moment here. As we talked about this, I put on this trade for earnings, and the market has done nothing but gone down since I put that on. And if you guys remember, what I had done is sold the October 120 puts. I sold October 120 puts in here, and I collected, I think it was right around 60 cents, if I can remember correctly, with the IBM trade. I guess I'll just have to pull this up because it's not pulling up. IBM, I sold the 120 puts in there for 57 cents. So 57 cents on the October 120 puts. All right, so that puts my break even. I ended up getting long. So now I'm long IBM at 120 minus the 57 cents for my break even, right? Well, and then if you remember, what I had done is also gone out there and flipped it to the November. I sold some Nov, which expire in 20 some odd days. Sold the November 105 puts, which are getting very close. You can see we've broken down here. Sold those 105 puts for $1 credit there. So again, trying to lower my overall cost basis, and I sold the November 120 calls in there for another $1. So all of this being said, I get to collect all of those. Total of $2.57 is going into my account, right? And if it gets called away from me at 120 with these calls here, that's where I would have my longs called away from me right at that scratch. But I still get to keep the $2.57. And if the market goes down and clips my 105 puts, I get put stock there. Then you guys know that I will be at a pretty nice break even of somewhere right around 112 or something like that. What is that? 112 and a half, something like that, I think. Trying to do the math in my head and it's not working out. But anyway, that will lower my overall break even. I'll still get to keep all of that credit. And so really my break even probably would be closer to 110 if my math is right, which I don't think it is, it's probably closer to 115, 112 and a half, something like that. So 110 will be basically my break even on that if all of those things come to fruition there. All right, so that's all I've done there for IBM. I just wanted to do a little bit of a recap because those stock did get put to me at 120. But again, trying to stay mechanical, lower my overall cost basis. And then with Coca-Cola, as part of this whole slide here today in the markets, Coca-Cola, is a reopening trade. They haven't diversified to the snack aisle at this point in time. So obviously that is going to hurt Coca-Cola. I'm still long Coca-Cola at 53 from the last earnings. If you guys remember, back in and around here, I got long at one. Actually, it's probably been longer than that. It's probably been since the market sell-off where I got long at 53 when I started selling those puts, now that I think about it. So I've gone through a couple of earnings with that trade, lowering my overall cost basis on this. I decided to do it again today and went into the November and sold the 52 calls in here for 40 cents. All right, so again, trying to lower my overall cost basis on this trade, and I have continuously done that by selling puts in here, selling 30 puts, selling 45 puts, and selling some covered calls against it. At one point in time, I sold the 50 calls in there. So really playing around with this, lowering my overall cost basis, and continuing to stay mechanical with that. Selling the 52 calls for 40 cents. Yes, I am long at 53 outright, what it looks like in my portfolio, but because I've lowered my overall cost basis quite dramatically throughout this time, I've collected well over $1, almost $2 in credits. So would be happy to have this called away from me at 52 and just keep all those credits that I've done by staying mechanical in this trade. And that's all I've done so far today. Keeping my eyes out for it. Might add some long deltas as if the market really starts selling off, if I can find some opportunity out there. But so far today, this is what I've got going on. I hope you guys had a great weekend. One last thing, we do need to make sure we go over our site disclaimer. Know your risks. Make sure you know what you're getting involved in here. And please take a moment to read over this. That's about it for you. Other than, if you can't take that, take it easy.